Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. I'd like to start with our risk disclaimer and just remind you all that anything I talk about in this video should be considered as hypothetical. The trades were not actually placed, they're just shown for training and education purposes only. Also remind you there is a risk of loss in trading. All decisions are your own sole responsibility. Remember, professional traders know and understand that losses can and will and do happen. It's all a part of professional trading. Right, let's have a look at some charts. I want to start with looking at the E-minis, in particular the ES from yesterday, and show you a trade setup that unfolded here yesterday. It was a TS3 sell. It looked like a perfect valid trade setup with our new MTP trend indicator being red stroke grey. If you had have taken this trade, it would have been a losing trade. Again, I think it's important that software vendors show losing trades to remind you all that losses can and will and do happen. We use correct position sizing to keep our initial risk small and under control, so when losses come through, they're kept small. In this case, less than 2% risk on a sample $20,000 account. Remember, you can, in the accounts and risk, change your risk profiles so you can reduce the risk to 1% or less if you feel that's more appropriate for you. But I want to have a look at this with a slightly more advanced eye and just remind you all what I teach in the training webinars is it's best to trade when you get a clear picture. So let's have a look at this from a slightly larger standpoint, and let's go to the 15-minute chart. If I place a DP off that last low, you can see that yesterday the market had gone through the DP, then gone back again, so technically the large trend was still down, but it wasn't quite clear, particularly when you go out to an even longer time frame chart, the hourly chart. If we zoom out a bit, can you see how yesterday's lows around here, around the 08, 07 level, were pretty much double bottoming with the lows here back on the 12th of September. Double bottom in standard technical analysis is a support level, so there could well have been a bounce off that level, which obviously did happen. So the point I'm making is, was the large degree trend yesterday still down, as you may have thought by our trend indicator and our DP, or was a bounce likely because we're coming in at more traditional support of a double bottom? Now, what I teach is when you're unsure, then stand aside. So in other words, if you're slightly unclear about a picture, there's no need to trade. There's no one forcing you to trade. And this is what MTPredictor is about. It's not a black box system where you should take every trade setup no matter what. It's a system where you identified for potential trade opportunities and then you use your discretion with a view to the large degree trend to then decide which trades to take. The reason we do it this way is because every single one of you is different. In other words, every single one of you has a different aversion to risk, a different level of experience, and therefore will use MTPredictor in slightly different ways. If you're more conservative, trade less and only trade when the picture is clear. If you're more aggressive, then be aware of when you are against the large degree trend. And if I look at this one here, when you get to the 100% initial risk level, which you did on that bar there, then bring your stop to break even. So it's all about controlling your risk and trading when the picture is the clearest. Again, there's the only people who want you to trade a lot are brokers. I'd much prefer you to trade far, far, far less and only trade when you get the clearest picture and the most ideal setups. For example, if I go to the DAX yesterday, a lot clearer setup was at the low on the DAX on this VS buy setup, because if I go out to the 15-minute chart, scroll out, here you can see here was the previous low on the 15-minute chart. We right mouse click, place a DP on. Remember, the DPs are on your chart in advance. These are areas where potential support is coming in the future. But can you see how the DAX came down and hit that level absolutely perfectly? If I place a DP on here for a potential target, now let's go down to the 3-minute chart and see how that looked. Can you see how this is so much clearer than what I've just shown you on the ES? In other words, we had a VS or a volume spike setup. Remember, that's where you have a high volume spike on a bar that goes through a previous low and then fails to follow through and reverses. But can you see how that was happening at higher time frame support? Our MTP trend also went black at that particular time, showing that the major trend or the major support was coming in and the major trend was potentially likely to change. But can you see how that's a clearer setup? Let's place the analysis on here. And you can see the market went up to the first target where a profit of plus 4.5R was available. In other words, 4.5 times the initial risk. There's also another trade setup, which is, again, another favorite of mine. Remember, I like these VS setups. The other favorite is the Holy Grail trade setup. If I clear everything off, this is where you get a nice major low, as we did here, coming in higher time frame support, initial rally up, initial correction, unfolding as an ABC into a potential wave 2. This is what we call a Holy Grail trade setup. Why? Because we are looking to trade a wave 3, which is usually the longest and strongest in a completed 5-wave sequence. And here you see the market went up to the typical wave 3 WPT, where a profit of plus 2.3R was available. It would have been nice if that entry bar there would have been smaller. That would have allowed us to have a better trade. But as we know, we can't choose what the markets do. You see our blue trend indicator was in line with what the higher time frame support and resistance zones were showing at the time. Therefore, the picture was nice and clear in around this levels. We wouldn't be looking to do these sell setups because, one, the trend is blue, i.e. up, and also we're looking to come off a support zone here on the higher time frame chart, going up into this resistance zone, so therefore the large degree trend was up. But this is what I wanted to do today's video about, is that it's best to trade when the picture is clear. In other words, in and around this particular area the picture was clear, but when we had the ES yesterday the picture wasn't quite so clear on the large degree trend. Remember, markets go in cycles. It's what I call the cyclical nature of trading. In other words, we'll have times when the picture is clear, we'll have times when the picture is not clear. This is why most people make a mistake when they're trading, and particularly when they're trading Elliott Wave, is they try to place a pattern on the chart 100% of the time. Quite frankly, you can't do it. Half the time markets are random and you don't know what's going on. So this is why, again, why I don't like the idea of using a mechanical system, because that implies that you should trade all of the time and have positions in the market, or basically be taking positions all of the time. Markets, we know, are random half of the time or unclear half the time. Therefore, during that time you should be not taking trade setups, or if you do take them, then as I've suggested here, be more aggressive with your stop loss and get that stop loss to break even far quicker. So this is what MTPredictor is about. It's about trade management and controlling your initial risk on entry, but it's different for different people and their different level of experience and basically how aggressive they are in the markets. There was also another nice trade yesterday, a manual trade that we look at, which was off our gap opening trade. Can you see here we had an outside gap down. We had the same on the NQ yesterday, outside gap down, and the same on the YM, again outside gap down. And if you look to do a nice little trade around the break of the first 3-minute bar to take profit at around 2R, which was about there. 2R, where's 2R? 2R's there. That would have been a nice little profitable trade of plus 2R. So that would have been the trade to do yesterday, because that was the higher probability trade, because outside gap down in all three markets and the picture was nice and clear. Remember, when we have a gap down we don't look for potential support, because the gap indicates that markets are usually going to carry on in the gap direction. Probably about 60% of the time they do that. So when we have a gap like this, we know that our potential support zone, as we had on the chart here, is probably going to fail and the market's probably going to carry on down to new lows. So that's why I wanted to do today's video, just to remind you of the cyclical nature of trading, to remind you that if you are less experienced and more conservative, is only wait till you get the clearest picture. Only trade when you get a nice clear picture, everything makes sense and everything comes together. There's no need to trade all the time. MTPredictor is not a black box system where we take all the signals blindly. It's a system where we use it to use risk control on our entries, and that will be different for different levels of traders. Again, I think it's a good example yesterday where the large degree trend on the ES was not as clear as it could have been, and compare that with the DAX coming in at this low here, where the picture was coming in very nice and clean and clear for a couple of very nice trade setups there. So that's my advice. Trade when the picture's clear. When it's not, stand aside and wait till it either becomes clearer or look for another market and another time frame.